All right, guys. Hello. Welcome to Monday, the 23rd of March, 2023. And let's go through a trade recap. Okay. Um, coming into the day, what news did we have? Well, if it lets me open the thing, there we go. We have no news of significance. Okay. Now this is going to get a bit confusing, but basically, I was on the contract delivery month chart instead of the MESMQ1. Okay. But either way, the analysis still holds throughout. Right. So I went into the monthly chart because I was actually quite interested, and we can see the monthly chart. We have these two gaps, okay, in the contract delivery month, right? If I pull up, let's say, oh, sorry, if I pull up TradingView, see that on the monthly, um, those same gaps are still here, right? We have this gap, we have volume imbalance. Do we have volume imbalance? This is yeah, okay. I'm gonna change this up, but basically, let's just have a look here. No, that's the correct one. Let's do this. Okay. We can see on the monthly that we have these gaps, okay? And price eventually is going to want to reach into these gaps. Why? For balancing, right? For correction. We've seen it happen here where we have a massive wick, okay? So you sweep out this liquidity and then we have a massive rally higher, okay? So you tap into this gap perfectly, this order block, and we run off higher, okay? Same thing here. Look at all these gaps and we rally off higher, okay? So long term, we're kind of looking quite bearish, okay? Especially given the war and all that stuff. On the weekly, we can see the same thing, right? Where we have a volume imbalance and then a gap. Okay, I've been talking about that gap for a while now. And then on the daily, we can see that just before New York AM open, right? We run back into this bearish gap, okay, on ES. Okay, so this could be a scenario where we continue lower as we close below the previous day's candle, and have been confirming lower prices overall, right? So overall, we're looking bearish. Okay, now on the hourly, what do we see? We have this massive candle, right, which taps into what this 4-hour gap takes out this buy side, and then we tap into the golden level. Okay, we tap into the golden level, and there's this 4-hour gap that's not been tapped into yet. Okay, NQ, we have yet to tap into the golden level, but we have swept this area here. Okay, we've swept the area here and we've tapped into this gap. All right. The reason for this massive candle today, I have no clue. I have no clue. I checked the charts maybe 20 minutes before they actually opened, so I was coming in with a bit of a blind eye. Okay. Um, but yeah, so we take up those intermediate time highs that were protecting the bearish gap last week. I think the most important thing to do is to look out for what the 10 a.m. candle does. Now, 1 hour, what does it do? It forms a bullish gap whilst having this explosive candle, okay? Other than that, there's not really a lot of information. So this could be a draw, this could be a draw, this area could be a draw, okay? And yeah, I also forgot to mention that on both charts, we take out both the previous day low and the previous day high, right? We take out the weekly range low. Why? Because there's a weekly range low, there's a weekly range high, okay? Honestly, I just marked it out here. So weekly range low, weekly range high on both, and then obviously we took it out today. But yeah, we could also very much be having a high time frame SMT at a relative equalizer taken out. So we have these lows, okay? ES takes it out. NQ, what does it do? It fails to take that out. Okay, so we show some buying pressure just before taking out these lows. Okay. Now pre-market analysis. To me, it looks like what have we done with this explosive candle? Well, we tapped into obviously this golden level and then we swept out Thursday's high. Remember this movement was really choppy, right? Where we had nothing going on, and then boom, right? PM it had the rally, okay, and that caused the high, and then we continued on lower Thursday to Friday, okay. But yeah, sorry, I had to quickly cut the video, but what I think I remember saying was we take out the Thursday to Friday kind of decline, we rally in, and obviously tap into buy side liquidity as well as this 4-hour gap, okay. Um, So yeah, to me, it looks like on 50-minute we have a super last week Thursday high and could begin to break down lower, right? Midnight opening price, what do? We move lower, we form a Judas swing, and we rally higher, okay? Um, London session trades, lower, okay, causing that Judas swing, but it does not reach any key level, okay? It does not reach any key level, and we see that at 7 a.m. the explosive candle begins, right? Ideally, I want to see lower prices to take out London lows, but I'll keep an eye open to see what sort of conditional buys I can produce at the minute near price. Okay, so kind of did a little bit of digging, and regarding conditional bias, this is what my idea was. Okay, so market runs into New York AM highs, right, aka here, okay, which is what initially formed. And then we decline lower into what? This internal bullish 1 hour gap that caused this massive spike, as well as taking out this low, okay? And obviously maybe even targeting further down, okay? B, market manipulates into the bullish hourly gap, okay? And then it rallies on higher, taking out what? Buy side liquidity, and so this high, the golden level, all that stuff, okay? To the 4 hour mitigated gap, yep, okay. And then C, market manipulates higher, taking out the intermediate term high, which is this high over here, okay, or this high here. And we take out early sellers, and then we begin the decline into the internal gap. D, market continues higher, right, forming a London reverse New York continuation, but obviously there was no key level hit during London, so that wouldn't make sense. Now, market opens and it trades down into New York AM lows. We can see we sweep right into it and we take it out, okay? I'm still going to be patient. All right, look, I feel like this is the perfect market to shorts. We are in a golden level in the higher time frame. We have areas to reach with regards to liquidity, and overall high time frame narrative is pushing for lower prices. So here, I was just remaining patient, just kind of sitting, watching the chart. We're kind of chopping around. So I would love to see a sweep of that high and then a move lower. Given that we got a supermassive candle this morning, New York AM could be cooked and we consolidate, right? We can see that when the market opened, it took out the initial New York AM lows and then formed its new low. Okay, so we sweep, we move lower, we sweep it up, and then we start getting this rally on high. I created like a mock entry of a rejection block that would have worked out and would have taken a profit early, but obviously I kind of want to back test that as well as just kind of have it as a confluence rather than an entire entry, because rejection blocks are actually really good. I don't mind the thought of them because they get you in and out of the market very quick. Like it works both ways. You're either going to lose very quick or you're going to win very quick. Okay, and that's what I like. Here we have another clean shorting opportunity. Why? Well, we have this 15-minute range. If we sweep this high, tap into the golden level. Right? We tap into the golden level, and then obviously maybe an SMT forms. Okay. Here in the screen, we've got a lot of stuff going on, but what happens? Well, we take out this high. If we take out this high and we reach into the golden level, okay? We can see they're closing away after taking out New York AM's high. This in turn formed another one, right? I don't know if this is enough for me to take a trade yet, as there is a 5-minute high marked as buy side liquidity that did not get taken. So it's this 5-minute here, okay? Still waiting on the market to provide me something clean, but it seems like we are retracing into a 5-minute bullish gap, right? So this is the 5-minute gap. It's a 5-minute gap, okay, and we're just retracing into it, right? We have loads of stacked highs. We have this high, and then obviously that 5-minute high up there. People who took a long, obviously all the way down here during New York 30 AM open would have obviously caught this nice move into this high, okay? But yeah, if we displace through, I was looking at maybe taking a continuation short where into obviously around this area, okay? In terms of the market, what I'm seeing right now is a bearish SMT on the 5-minute. Okay, so we can see we sweep this high. We failed to do so here. We failed to do so. The rejection block. We see a nice, very wicky candle, right? And then we also see ours starting to break down. Now, at this point where we have this 5-minute gap, let me just say, what's that 5-minute gap? I'm writing on my notes. I'm staying patient. If we reverse this gap, then it's a strong confidence that we are in fact bearish. If not, I'll wait to see a confirmation for a short later on. It could be that my entry missed was at the very opening of New York AM with that initial low being taken out, and that's okay. It could also be that I'm lacking adaptability now, and we could actually continue on moving higher overall. So now, in fact, we actually do begin moving lower. Okay, we begin moving lower. We take out this, we displace through this 5-minute, and this is my trade idea. Okay. We have this intermediate time high, and bang, golden level. We have a gap right here, and my stop loss was at intermediate time high when I'm targeting New York AM lows. Okay. Entry did not reveal itself. Okay, it did not put me in the entry, and obviously, what do? We decline down and we take out New York AM lows. Okay, we actually do it. We take out New York AM lows. Could have maybe caught an entry at this level, but obviously that was not the golden level. It wasn't even discount, so taking it would have been a falugal. Okay, falugal is a new word I've just made up. Okay. Here, this was a bit of impatience, right? Where I was just like, this next intermediate time high. Let me see if I can just catch a quick continuation short into this gap here. Okay. But yeah, I think the smart idea, which was obviously the smart idea, to take off this limit entry. Why? Well, because we have a 15-minute gap here, okay, within a premium. So there's this golden level that price may want to tap into, okay? And obviously on the high time frame, we could just be consolidating, right? So taking a high, taking a low, taking a high, taking a low, just chopping, right? We look here on the 5-minute, what do we see? Well, it becomes much clearer that we are actually consolidating. Okay, we look to be having some sort of consolidation. We haven't broken the range high, which is here, right? This is the range high, the range low. We failed to break any of it yet, so there's no evidence for a breakout. Okay, and this was the trade idea. So what do we have? Well, lunch retraces into this key level, which is what? The hourly bullish gap. Okay, at that point, we get a change in the state of delivery, we get a market structure shift below the displacement. Okay, and I draw my flip out tool from this high, so from this low to this high, and what do we get? A golden level for value gap that price has not yet tapped into. Okay, people would have entered, say, maybe at this low where there's still some area of this gap to tap into. Okay, so they would have caught an entry here, but I just took a much more refined one over here. Why? Well, because I like it. Look, we can see that the gap perfectly lies within, and we're also at the key level, so we are showing some bullish prices now. Okay, and on top of that, if we look before, that would coincidentally mean that we actually break out of the range. Okay, that means we break out of the range, and where can we next expect? Higher prices. Okay, so that was a trade idea, and I was kind of away from my computer, and we moved higher. Okay, we tapped in. So we tapped in, where is it? It was once here, and then tapped in again lower, completely filling it in. And then we start getting an aggressive move higher. Okay, I took off a position at this red line, the 6653.75. Okay, I had two contracts, so took one off, and my stop loss is at break even. Okay, so currently in the car in this execution I'm in. I was picking my brother up when I checked, price reached that red line, which I took a position off. Price at break even for now, and I'm going to see just reach equilibrium of this leg from lunch. So we made that high. Price also reached a bearish 1 hour gap, which we could see price following high time for a narrative and moving lower, right? I will continue to let price play out. So at this point, let's actually just kind of get us into the chart right here. Okay. Let me just kind of make it clear. So what I'm trying to see now is in terms of getting a, why is it so difficult? Basically, do we see how this was the entry that I took off, right? I want to see us reach the 50% level, okay? 50% level here. Where do we still have this? Okay, this gap does have an intermediate term low. And when we reach it and we break through the most recent high, that's when I'll move, obviously, not even move my stop loss to break even, but actually move it to that intermediate term low or high that gets formed, okay? We can see that we are in this 1 hour bearish gap and it seems to be getting respected. So maybe I might want to tighten up my stop loss and actually place it here just so I can mitigate further loss. But yeah, I think you guys are actually going to see this now happen. What the fuck is going on? Let's just quickly raise it. What's the low? 6639.75. 6639.75. Okay, so let me just quickly answer you lot. I've moved stop loss here and explain why. Well, I have moved my stop loss to this 5-minute intermediate term low. Why? Well, because we seem to be getting a clean bearish reaction off of the 1 hour bearish gap. Okay, I would rather be stopped out at this point rather than at break even. At break even. Okay. But yeah, if anything unfolds with regards to this trade, if we move higher, if we hit full TP, whatnot, obviously we can see the target is this 15-minute bearish gap. Okay. I don't know if this looks like a lot. Oh shit, let me put the magnet back on. I don't know if this looks like a lot of noise to you guys, but to me, it actually looks just perfect. I can see exactly what's going on. Let's just quickly. Bang, bang. Okay. and obviously it's the 15-minute gap we want to be targeting. Why? Well, look, let's just quickly look. We draw out this leg. Okay, we can see what? Well, we just tapped into the discount, but look at this golden level, right? Perhaps we do this one little bump up, okay, with the wick or whatnot. Okay, we're gonna see it with a wick, push up a little bit higher, and then boom, we move up. Okay, but yeah, I'm gonna keep you lot updated. If we reached our intermediate time low, then so be it. Okay, there is a 15-minute gap here, which might cause for me to get stopped out. But yeah, I think one thing I do want to kind of practice is there's this one guy on Instagram that I found, and he said whenever you reach the discount level, okay, and we break across the previous high, that's your best chance to start moving price to break even. Why? Because then you've got a completely risk-free trade. Okay, so maybe maybe I would use this trade as an experiment on that. But yeah, so far the trade looks to be playing out pretty well. Okay, so I'll keep you guys updated. All right, guys, I'm back. So what I'm gonna have price do is we've tapped into this gap, right? And if I see the first break at like a first decline, right? Then I will close out the position. But what I'm thinking of doing is pretty much if price pushes through, I'll trail my stop loss to it, okay? And then have a candle, sorry, have my target be the golden level, the 0.705 level here, okay? So I'm just literally waiting on that to happen, and then I'm just gonna click confirm, and if we get stopped out, and so be it, because that's just the full TP and the full trade taken, right? Yeah, it's literally just kind of waiting now. I want a candle close above it. Okay. So let's just I'll come back in 30 seconds to see if we get it. Okay. Alright guys, so what happened was basically I on this candle I confirmed my stop loss to be here and then bang, we get that. Okay. This could just be a simple little retracement into this 5-minute gap before we're ready on high, but that's fine. I'm not fast. I'm out of the market and I'm not gonna ask for anything more. Okay, we had a really good trade today. So yeah, it was a super good trade. Really proud of myself for staying patient for the entire day. All right, obviously this trade occurred at New York PM. It was adapted, right, given that we hit the bullish key level, okay, and slipped certain liquidity, causing for this entire move higher. Okay, target was perfect, right? Yeah. We did not get too scared when it came to moving stop loss, right? Because we reached this Audi gap and then we had a bit of a decline, right? Retracement, and we pushed off even higher. Okay, so that's that for today's trade recap. I hope you guys learned something from it, and I'll see you lot for the next one tomorrow. Bye bye.